Good morning, everyone. Welcome to the Modern Market, where every day we discuss all things to do with the modern market. That is the crypto market, sometimes the NFT market, and how to ideally make some or a lot of money on the internet. Loaded up for discussion today, we have the S&P 500 breaking all-time highs, and Coinbase passes all-time high of $380 before a short pullback. Coinbase also announced its launch of US perps trading in July. That is a big conversation we want to have today. Is it going to kill Hyperliquid in any capacity? That is one of the core conversations that we want to talk about today. And Robinhood announced instant 2% back on crypto deposits, not including USDC. I'm very conscious a lot of these conversations now are veering towards traditional markets, whether it's stocks, whether it's more official traditional crypto institutions. I think that is where the conversation is going, at least at the moment. So let's discuss it today. We've also got the latest on price action on crypto and NFTs as usual, and where we think attention is flowing at the moment. Delighted to say, got Legendary in the co-host seat with me. We are ready to get into it, but just a reminder, friends, before we do, nothing that we say here is financial advice, because market's risky. Market's risky out there, so please proceed with caution and exercise your own judgment. With that out of the way, Legendary, it is Friday. It is the 27th of June. How are you doing, my man?
I'm doing quite well. Excited for the weekend. I feel I need to do some portfolio work. There is a lot of things need to be done. Basically, I need to attack the stable stash, which means I need to leave my house because I don't have access to the majority of my crypto from within my home. So there is this little trip that needs to be done for me to move some of my stables back on the betting table, back onto the betting table.
I see. So you are thinking it is a good time to bet.
I think so. Yeah, I got the appetite for that, and to allocate more.
What do you mean? Allocate to what?
A bit more yield farming, I guess. I want to continue on the discussion that we had yesterday, basically, and just borrow more against my BTC and put that to work in different places. Have some more on Hyperliquid. Have some more in Polkadot to farm there as well, and just turn it into more active capital, given how cheap it is to borrow against that BTC.
Yeah, we've been speaking about that, right? Like it's pretty decent to be borrowing against Bitcoin at the moment. And as you mentioned, we're partnered with Polkadot for today's show. We're going to be doing our Polkadot explorations, and there's a really interesting opportunity for Bitcoin, which we will be diving into just in a little bit. So before we get there, let's get to the main stuff to get you up to speed with everything that's been happening in the last 24 hours, starting with the majors as usual. Let's start with Bitcoin, which is flat at $107,000. We've got ETH, which is flat at 2.4K. We've got XRP down 3% to $2.10. BNB flat 645. Solana at 142. And our favorite other alternative major cryptocurrencies, Hyperliquid, is flat at $37, and Sui is down 1% to $2.60. Getting into the meme coin side of things, seems pretty red today, if I'm being honest with you. Doge is flat at 16 cents. Pepe is down 1%. Trump is flat. SPX, Murad's coin, is down 6%. Bonk is down 2%. Filecoin's actually up 5%. I thought it was down earlier. I'm just clicking in there to see. I think maybe that's just just in the last few hours, it's kind of up a little bit. Nothing really to write home about, nevertheless. So just back above $1 is Fartcoin. Anything else notable here? Dog on Bitcoin is up another 10%, up 30% in the week. It's actually one of the biggest outperformers on the meme coin side of things. Obviously, this is I think this is technically a rune, right? On Bitcoin. Outperforming everything else. Everything else is down on the week. Not Dog as things stand. I think they had a listing with Kraken earlier in the week, which someone said in the comments. Maybe that's at least part of it, but I don't know. I feel like it has to be something more than that for that type of outperformance. Everything else kind of broadly red, to be perfectly honest with you. Useless coin, which is the chosen coin of Bonk Guy at the moment. Bonk Guy, famous for running up a humongous bonk position, maybe more than a year ago now, into the multi-million dollars. Useless coin is now up 4% to 100. God, 140 mil. This was less than, it's like 50 mil last week or 2 weeks ago. So, okay, big win there. That's up like 30% on the week as well. So pretty nice price performance there. Getting into the headlines themselves, we have a lot of stock stuff, frankly. We've been talking about how a lot of the news in general, we're shifting more and more to treasury companies, more and more to stocks. S&P 500 broke all-time high yesterday, and coin passed its all-time high as well. It went as high as $380 before a little pullback. We'll be talking about that more today. We've got Coinbase launching US perps trading in July. Some people attach the price action to that piece of news. I don't know if it's 100% to do with that. Definitely want to debate how influential that piece of news will be for Hyperliquid specifically, but also maybe just the perp market in general. And then finally, Robinhood announces instant 2% back on crypto deposits, not including USDC. I wonder whether Legendary will be allocating anything to Robinhood as an initiative to kind of attract more crypto. I'll give my thoughts as well. So notable price action. Murad's coin is down 6%. Dog was up 10%, as we mentioned. Ledge, is there anything we need to know on the NFT side?
I think for the first time, I'm going to answer that with no in 500 plus shows. There's nothing noteworthy, and I don't want to say that the majors are flat for the like 5th time this week. So I'm just going to say nothing to report on that.
Nothing to report. That's okay sometimes. That's fine. We're not going to make stuff up for no reason. Web3 Roundup. This is pretty big. Kraken announces Crack, new payments platform with up to 10% rewards. I might check that out for the 10% rewards if that's what it's going to be. But maybe we can answer a similar question there as with the Robinhood question, Legendary, later. Be like, are we going to let other people custody our money this cycle? Or are we going to stop doing that based on what happened last time round? Let's answer that question in a bit. Denari is the first platform to secure US approval for tokenized stock trading. That's interesting to know. Metaplanet has also acquired another 1,234 Bitcoin for $132 million. Euler Labs announces $100,000 of incentives for its super lending app on Arbitrum. I like lending a lot, so I think I kind of want to just check it out from a lending perspective. If there's some incentives, why not? Gonna have a little look. Haven't dived in yet though. And then in some other bits of news, Yuga Labs announces new 8v8 deathmatch game as part of other side updates. I know a lot of people are very much anticipating what Yuga Labs will push out from other sides. So that's a new game for people to play soon. And the NFT lender up $100,000. An NFT lender became up $100,000 as a borrower defaulted on some Grail Azukis. This was actually Andrew Kang, Legendary. And so obviously allegedly he's up like 9 figures on these robotics investments. So he just doesn't care about this liquidity. That's the dream for an NFT lender. You find someone who just doesn't care about their assets, has not written it down in their diary of when they need to pay you back. And even if they have written it down in their diary, they just don't care because they're so rich that they just don't need the $100,000 anymore. What a beautiful scenario for a lender. And then finally, the Believe ecosystem announced that they have created a $1 million builders fund for coming months to support high potential builders. That's that. That is the Roundup, Ledge. Before we get to the main stuff, what's catching your attention here?
I feel like the Kraken crack stuff is interesting, especially in conjunction with what's going to be our third main headline today. And that is that companies are really, really trying to get TVL in very aggressive ways and offering you like a deposit bonus or deposit matching. And that is basically the consequence, I think, of what we've seen last year, earlier this year as well, with stablecoin issuers like PayPal, with PYUSD, offering you incentivized yield by switching over to their stable and putting that into DeFi. Plasma doing essentially the same for Tether. Deposit all your stable coins, they're going to be converted to Tether for them to increase the market share, and you get access to the Plasma public sale. And the same thing here with deposits, where both Robinhood as well as Kraken want you to custody the money, to deposit the money with them. And I I get it from like the company's perspective of wanting to do that. I don't see why I would use a product like Kraken. And they say like, yes, I can deposit, or like not like Kraken, like I use Kraken, but not like Crack. But they say, yes, I can deposit money on there. Let me bring the website up in a second. Send money to anyone, anywhere, instantly for free, no catches. Crack it. You can do the same thing on the blockchain, and you can make the argument, yeah, but the other person needs to have a wallet. And here I can make the argument, yeah, but the other person needs to have probably a Crack account, or if not, they can use any of the neobanks, the Revoluts, whatever is out there as well. So it's a very competitive market to get into. And I feel like that typically companies, neobanks, have attacked it like from the basically quote unquote like TradFi, from the retail side of trying to get the normie, the retail user, to use Revolut, to use whatever neobank is out there. And now we have companies doing the same, repeating the same playbook, but coming for the Web3 user and wanting them to deposit with them, which obviously is a super large business opportunity. But I think it's a way harder sell to get someone to move from the wallet to a product like Crack, or deposit a BTC with Robinhood, than just getting someone to onboard to a neobank who used a traditional bank before.
So is your thinking there that the gap between the neobank and Kraken is basically disappearing?
No, I would say that the thinking is like a traditional bank is probably more expensive, isn't as cool as a neobank. Neobanks are typically free. That's an easier sell to get someone who has a bank account, to get them to move to a neobank. Whereas getting someone to move out of their wallet from self-custody into a product like Crack is more difficult. Like you literally need to throw money at them for them to make the move. And this is what Kraken and Robinhood are trying to do.
So it's interesting though, right? Because people often say that there are, people often say like, oh, the masses, you know, mass products will be outside of crypto. This is for like other people. But in my opinion, you know how a lot of apps will try and go mainstream. People always talk about mainstream and doing things to attracting other people. But one of my views is that I don't think we give ourselves enough credit as a capital base, apart from maybe in the States this year, where I think a meaningful amount of money ended up lobbying the right people to get the kind of changes that they needed to happen. What's my point here? The point is, I think they do want crypto capital more than people kind of maybe give credit for. Like they're specifically targeted. So I think the Robinhood deal, for example, and since we're talking about it, we might go in that direction anyway. The Robinhood deal is explicitly carving out USDC. Like they don't want your USDC, they want your crypto. Which is kind of interesting. Like I don't know the answer to this, but why do you think that is? Like just genuine question. Why do they not want your USDC? I mean, surely they probably want it as well, but why specifically do they want to get the custody of the crypto?
Because a lot of people just have money in crypto, they have money in BTC, they have money in ETH and other assets. And that's just a beautiful way to grow your assets under management. I feel like getting someone to deposit USDC is so alike to getting someone to deposit dollars, whereas it's probably a different path to actually get someone to deposit their Bitcoin, to deposit their ETH, to deposit their Fartcoin, whatever tokens they're holding, especially if it comes with this like 1 year lockup. And that's another angle for them to grow the not really assets under management, but like the TVL on the app.
Interesting. Okay. Yeah. I mean, I do find that very interesting. Personal preference here, Ledge. You said, are you kind of tempted by these attempts?
No, absolutely not. And I mean, since we're speaking about it, we're basically covering the headline. So
yeah, we might as well just go into it now then. So just I'll just quickly like get into the Robinhood deal as I think we understand it. So there's this one tweet from Robinhood where they shared the crypto deposit march starts today. This was just a couple of days ago, actually. Customers can receive a 1% match on crypto net deposits. If the Robinhood community transfers $500 million or more in crypto, the match will increase to 2%. It ends July the 7th. So not a very long initiative, trying to keep it quite tight. And then Cyrus, prominent kind of trader, had this to share. Hate moving my cold storage Bitcoin, but this feels like a must do. Whereas I think a lot of people in the comments maybe were taking the other side. What were you thinking here, Legendary?
For 1 to 2% to move my BTC and put it in someone else's custody and have it locked up for the year, I would never do that. There's like way better opportunities to farm and earn on chain with that. And use it, even if you don't want to farm, like use it as a collateral, use it as a productive asset, or do both, earn yield on that. And 2% is so little. So I'm not sure why Cyrus, who I respect very much and who I think is a great trader, is thinking that this is a must do. This is surprised me quite a lot to see him with this post, because I don't think he was like joking about that.
No,
The same
I don't think so.
that joke. Yeah.
Maybe he's got so much damn Bitcoin that 2% is something meaningful. I guess we never know what numbers people are playing with, right? Perfectly. One alternative option, given that I'm probably agree with you also, by the way, just for clarity. And the reason why I think I agree with you is for this reason, that Mr. Todd, actually, who's a listener of the show, I wonder if he's listening today, I'm not sure. Good friend of the show, had this to share. He said, I would deposit it via unit, of course, in a Hyperliquid account. Then I'd stalk one of the A+ lending platforms like Hyperlend or Felix as capacity grows and deposit into them. Presume you can get something off the EVM, unit activity you're getting by doing that as well. And the protocol you choose, you'll get points from them. So you get Hyperliquid activity, unit activity, and protocol activity. Of course, now, I guess this is the big risk that maybe lots of people do not want to take. You are taking smart contract risk, which is arguably bigger than any type of risk, because the thing might go to zero, which is scary. That is scary. And I appreciate that risk exists. But if you get comfortable with that and you think that no matter what happens, whether it's Hyperliquid or frankly any chain, right? We're specifically talking about Hyperliquid here, but whether it's some, we're going to talk about an opportunity on Polkadot in a second, or we're going to talk, and then there'll be other times where you can put Bitcoin in Solana somewhere. If you're comfortable with that risk, then I think the opportunity is greater than 2%, in my opinion. Ledge, do you have a kind of pushback or thought on that? And then maybe we slide into the Polkadot Bitcoin stuff.
Yeah, no, I very much agree with that. I mean, Polkadot Phunky would probably say that you can put it to work on hydration. TBTC is earning 12%-ish yield right now. But the thinking is, for I wouldn't put all of my BTC to work, neither on Polkadot nor on Hyperliquid. I still prefer to have the majority in cold storage. But the thinking to move like all out of it from cold storage and to put it to work for 2% is so absurd, because either it's so much money, like say you have 100 million in BTC that you're going to put in there, and 100 mil is a lot, and yes, you're going to earn 2 extra mil, but it's still like only 2%. So if BTC goes from 107 to 109 point something K, you have already out earned that. Or it's so little, you put in, I don't know, 10K in your Robinhood account in BTC, and you make like $200 on that, and risk having it with a custodian, having it locked up and not being able to sell or take profits when you want to do that. So it just doesn't make sense for me, to be honest.
I align with that. Just shout to Overarch in the YouTube comments saying, rather keep getting 5% on BTC via Wasabi with smart contract risk than 1% with custodial by KYC exchange. I think that's a fair point. Obviously, like some of these numbers, it really does depend on the quantity you're talking about. So some of these things will be personal to you, of course. So I think that's worth bearing in mind. Final question on this, Ledge, because since we just ended up getting into it, I think it's helpful to go after it. The last question I mentioned before, which is, are we doing this custodial stuff again at all? Forget the relative yield question, which is like, oh, it's only 2% there. I can go and get 10% on Polkadot, or I can go and get, I think I'm going to get 12% on Hyperliquid when all things are said and done. Forget that part of it.
Yeah.
What about the part of it where custodial solutions in the last cycle ended up being really, really bad for people? Actually, including with Robinhood, right? There was something that happened with Robinhood where they refused to let you take your Solana back out.
Yeah.
People got wrecked. So like, are we really going to do that again? Do we think we're positioned in a better way where regulations will mean that no one will have to go through that again? Or purely from a self-sovereignty perspective, is it better to have access to your own funds and keep custody?
I'll give an answer that's probably going to surprise you. I am self-custody maxi, you know that. But I also think for the majority of people, self-custody is not the answer because their opsec is probably just horrible. If you have a significant amount of money in crypto and all of that is accessible from home, like you have all of your crypto, all of your ledgers at home, that is, in my opinion, a horrible opsec because someone can just invade your home and force you, hold you at gunpoint, and make you send all of that crypto over. So you shouldn't in the first place even be able to access all of your self-custodial crypto from home if it's a significant amount of money that you hold. And I bet that a lot of people are not building the right opsec environment in terms of securing the seed phrase, in terms of not having all of the capital accessible from home. And for all those people, a custodian solution probably where you can only withdraw to your bank account, et cetera, is the safe option. Yes, you have the FTX risks, but there's also like other ways to put your crypto into custodial hands. I would simply say that for most people, holding the BTC in a spot ETF is the better choice than holding it in self custody. Same probably for ETH, not probably same for ETH, obviously. So while I personally love my self custody, I don't think it's the right answer for the majority of people.
I think I would say like some kind of hybrid of what you just described, because as you say, like when the portfolio gets a bit more complex, it might actually be reasonable for a proportion of your portfolio to be with a custodian, like at a minimum,
Yep.
just to de-risk. And if anything, this will be something give you an opportunity to speak to kind of a separate point, but maybe a related point in terms of risk management. One of the things that is happening at the moment is that the value of the dollar is going down, and we know that value of dollar is going down against Bitcoin, and so therefore crypto goes up. But it's not just going down against crypto, which is maybe what historically happened, whereas it was still strong against other worldwide currencies. It's going down against the pound. It's going down against the euro. It's going down against other currencies. And for people who are worldwide, and crypto is a brilliant worldwide asset class, this is actually something, maybe articulating a point here on the demand for stable coins. If the value of the dollar keeps going down, that's the trend. Like it makes me need to hold stable coins a bit less. There's no real, I think, alternative for me to get hold of pounds. Not that I want a ton of pounds anyway, but I'm always going to need pounds, right? So that makes me think I should hold more pounds, and that's probably be either in a bank account or either in one of these custodial things, which so it decreases my relative exposure to not only crypto but also US stablecoins, because I need to protect myself against the devaluing of the dollar against other currencies. So just wanted to give you a chance to come in on that ledge. And because I think that directly affects this exact question where it's like, okay, well, are you completely self-custody? Well, no, because if you're not in the US and the value of the dollar keeps going down, you're going to need to have your own currency or some other currency that you believe in, whether it's the Singaporean dollar or something. And maybe that's held in other solutions, right?
Yeah, I very much agree with that. I posted that yesterday that one of my best trades, or I mistyped one of my bet trades I posted, was to move my entire stablecoin stack from USDC into a euro denominated stablecoin into USC by Circle in my case, because I'm up 13% on that. And then again, this is exactly the point. Like you need to think about the value of the dollar against your local currency if the dollar isn't your local currency, because there's no point for me in holding dollar and farming a 6% yield while the fucking dollar goes down 16% against the euro. Then I'm way better off holding just euro And if I farm then 2-3% on top of that, or 4% with my USC on Moonwell or wherever I'm going to take that, it's already 20% against just holding dollars. So DeFi yield alone is not the answer if your home currency isn't dollar. I mean, obviously you can have dollar as a home currency and still buy euro, buy another thing to speculate on the dollar going down, but that's a riskier thing to do. I think Easy did that quite prominently. He bought Singapore dollar to hedge against, or to just be prepared for the case that the dollar is going down. But in your case, there is no good stablecoin for you, right? There's no GPB based stablecoin with significant volume. So that's another point in your case, if you want to have your local currency, to have it somewhere else that is off chain as well.
Yeah. While we're on this, I don't know if you've got what charts you look at, Legendary, just giving you, I think we should just dwell on that for a second, because I think that's really helpful. I don't know what charts you look at, whether you can bring them up in a moment to think about where the dollar is going versus the euro versus the yen versus whatever, versus the Singaporean dollar, the pound, and just talk through your thinking of why you made that decision some time ago. And also, like, what is the outlook here? Because I feel like this is a conversation we don't talk about enough, because everyone is so levered into crypto itself, and people are, if you tell someone in crypto the value of the dollar is going down, people probably are celebratory because it's like, okay, cool, well, the Bitcoin's going up. Forget the implications that it has for the rest of the world for a second, but Bitcoin goes up if the value of the dollar is going down broadly, and people are happy. But what happens then when they take profits and the dollar amount is going down against your local currency? This is the thing I think we don't talk about enough, and which you've articulated quite well there. How are you seeing that move forward? Like, there's a lot of people who are not from the US. So how should we be thinking about that, in your opinion?
Yeah. So the thing that I'm looking at is the DXY, also the Dixie, which is the dollar against a basket of 6 currencies, which are euro, Japanese yen, British pound, Canadian dollar, the Swedish krona, and Swiss francs. And this thing has been going down. It's down 10% year to date, 10.5% year to date, which basically means that the dollar is becoming less valuable against this basket of 6 currency that it trades the most against. And that is my thinking here was a simple one. So typically over the last couple of years, I primarily look at euro versus dollar, because euro is just my local currency. Used to trade at 1 to 1.2. So that means 1 euro used to get you $1.20 roughly. This was the case for a lot of years. There's been times where this was almost like 1 to 1.4. There's been times where the euro and dollar have been at parity or almost at parity. But I feel like this is where the market found some sort of an equilibrium. And at the start of this year, we had obviously Trump coming into office, and we had an extremely strong dollar. We had 1 euro only equating $1.03, so basically almost at parity. And my thinking was, Trump is going to bring a lot of volatility. Trump is probably going to be bringing challenges for other countries, especially for Europe. And this almost parity-like situation never held historically for a long period of time. So my thinking was, it wasn't like looking into some sort of macroeconomic analysis, but my thinking was based on those two facts, that the dollar is most likely to go down against the euro. And I just didn't want to be on the losing side of this. So hence I moved it into USC. It wasn't, it was more of a protective move. I didn't expect it to slide down that quickly, that much. I'm now obviously extremely happy about that, because my stablecoin reserve is like worth 16-ish% more, given that I've also been farming with a part of that in euro. But that was the reasoning behind me doing that trade earlier this year.
And are we expecting, how are we expecting the strength of the dollar moving forward? Like, things that are happening, right? So tariffs are obviously in place, although the majority of the kind of really aggressive aspects of it seem to be moving away. You have a spending bill, which is going through at some point, which has kind of largely disassociated itself from some of the aggressive cuts that maybe was part of the rhetoric beforehand. So do we think, and we're very much considering rate cuts coming in, getting priced in on Polymarket a lot more now. I can't remember how many cuts it's getting priced in for the rest of this year, but the number that people are betting on is much, much higher. So what's the thinking here? What's the outlook for the rest of the year in your opinion?
I mean, that Euro USD is now at 1.17, 1.18. That's should be a 4-year high for that. And we have seen
it's harder to call at this point, right? Like it was a great call then. Yeah. It's a far less comfortable one to be like, right, it's going to continue to slide against this.
It's a hard call from here because we haven't had rate cuts in the States yet. ECB had, I don't know, 8, 9, 10, whatever. There's like a massive difference between European and American interest rates. We still have this treasury situation that's not really solved for yet. We still have very high 10-year treasury yields. So it could go down. Euro could become stronger against the dollar, but it could also, then this momentum could also change once we see more rate cuts coming from, once we see rate cuts even starting in the States. But it's very, very hard. So I'm not really comfortable to make a directional call at this point in time, to be honest.
I feel like at this point, at least on the currency side, you're more like, and I don't know, I'm absolutely not I'm definitely not an expert in that arena. And I actually have no interest in that arena broadly. But it purely on the move that's already happened, it feels like one of those where it's like the move's happened. And it's almost like a do nothing scenario. Like if you're still in dollars and you missed the move, okay, we'll just stay now. And if you move, like that's how I think about it. It's the same way I think about it in crypto. Like if you missed the trade, all right, cool, you missed it, don't worry, just stay in. If you made the trade, great, you can hold that side of it. If you didn't make the trade, okay, cool, doesn't matter, forget it, just stay on your side of it. It's one that I wouldn't necessarily chase, although I think it's worth thinking about, because I think in this space we don't think about that enough. Right, I want to keep it moving, but Phunky, I know you had your hand raised. It might not have been where we took the conversation in the end, but happy for you to kind of go back to any of the points we were making, because I think they're all part of an interesting conversation here. Phunky, welcome to the stage. What are your thoughts here?
Jam, yeah, less about the FX situation because you guys kept getting deeper into that. I was going to really chime in on the opsec stuff because what Legendary said really rang home for me and Aaron. As we continue to accumulate Bitcoin, we were talking and said, like, maybe we should split this up amongst several different devices and like put one of them into. So we are the terrible example that Legendary talks about, right? Because we just continue to accumulate Bitcoin. And, it's like maybe we should put one in a safety deposit box and maybe we should put one somewhere else, or just mail a device to my brother and, figure out where's to put the keys. And we're also now concerned, I'll be 50 next month. And it's like, we have a trust. So we have something that says, like, if something were to happen to both of us at the same time, that this gets split up among all of our nieces and nephews because we don't have kids. We have none of these plans in place, which is kind of scary just when you think about the long-term value of these things. And even as I was riding the subway with David yesterday, I was kind of laughing, thinking about how our Roth IRAs have become sort of these just other crypto accounts, really. Like, I mean, I was telling how we bought coin at $50 and, that's at an all-time high. And it's like an 8X from just like 2 years ago. Or, like I bought GBTC at the lows because Sam had brought this point up that for most people, it's just easier to own an ETF or some kind of vehicle where people can't get it. And so I was buying GBTC because it had crashed below the NAV when all that game was happening with BlockFi and GBTC and Grayscale. And so like I bought that at like $12 or something during the bear, and so we have exposure to that. We have MicroStrategy, we have Bitcoin miners. We, like it's kind of a joke thinking about how much of but they've done really, really, really well because we've had so much exposure and concentration in the space. So I think that was an incredible part of the conversation that you guys were covering about just having the assets spread out in different places. So you have that exposure, but you're also reducing that opsec. And so this conversation this morning, I want to thank you guys, is really a kick in the ass for me to go get that done. and start thinking about like, how do we split this up among multiple devices, and where do we store those devices in separate places?
Definitely get that done and think about that. Think about the seed phrase security. You basically don't want to have one single event that can knock you out, essentially. So if you have a 24-word seed phrase, you can split that. And I don't know if maybe everyone knows this, and I'm saying something that's completely redundant, but you can split it in 3 parts. First 12 words, middle 16 words, last 12 words, which means you create a redundancy that if you lose one of those like sheets, every single combination, so like A and B, A and C, and B and C, if you split it up like that, 12, first 12, middle 16, last 12, can help you restore your seed phrase. Similarly, for like storing a separate devices, to not have all of your crypto BTC on one device, don't have all of that at home. If it's really a lot of money, or if it's a significant amount of money, think about a multi-sig. If you don't want to do a multi-sig, I know people who are working with multiple notaries so that they can only access it via like multiple notaries or lawyers that then give them access to the wallet. There's time-gated accesses. We need to assign a specific amount of transactions, maybe like from different places in a certain during a certain period of time to get access to your funds. So depending on the net worth and depending of your, not only the absolute number, but like also the relative number, like how much of your net worth is in crypto, it's definitely worth to think about storing both the assets and the seed phrases in a smart way. And the key thing should really be there shouldn't be any single failure that takes you away from your crypto. Like your house burns down, home invasion, you lose something. None of that should matter because you should have another way to access that.
Good stuff. Yeah, I think that's all wise stuff. Something to everyone should be keeping in mind on a routine basis. Right, we've still got a couple of headlines to get into. Fortunately, kind of related to a bunch of stuff we're talking about. We're going to be talking about Coinbase in 2 different directions in just a moment. Before we get there, let's get to our partnered segment for today on Polkadot Explorations, building on some of the Bitcoin conversation, the yield conversation we've been having. This is a super interesting opportunity, Legendary, which I think you're going to break down.
Yes, we are going back to Hydration, Polkadot's main DeFi protocol. We're going to see new farms being launched this week, focusing on the one hand on stablecoins, also focusing on TBTC, which is tokenized Bitcoin. And the interesting thing is that rewards will be paid in GIGAHydration. We did talk about GIGAHydration in the past, but here's a little refresh on how it actually works. So GIGAHydration is essentially DOT but on steroids. It does track the price of DOT while currently generating around 9% in yield from multiple sources simultaneously. And that yield is being derived from 4 sources, to be precise. The first one being staking yield from VDOT, which is a liquid staking token on Bifrost. The second one being lending yield from ADOT. ADOT is DOT, which is provided as a collateral on hydration lending. Third, trading fees between that pair, so VDOT and ADOT. And then last but not least, additional liquidity incentives. The TVL for GIGAHydration currently sits at $27 million and is up from 4.7 mil when we first covered that when GIGAHydration launched around 2 months ago. Really excited to see this new farms. We have the hydration subsquare up on screen. We have the vote that looks pretty good from what I can tell right now. Because rewards in GIGAHydration essentially mean that my yield is earning yield, and definitely excited to see that go live. Thank you to Polkadot for sponsoring this segment, and stay tuned for more Polkadot explorations. B, you're muted. Now you're back.
I'm back. Okay. Interesting. Really good stuff. We've obviously been speaking about the Polkadot explorations a bunch, and there's all kinds of useful yield opportunities over there. This being what I believe to be one of the best ones, to be honest, specifically on Bitcoin. So we'll keep bringing those to you as they are relevant. Phunky, come in here maybe with a bit of an update. I know sometimes these things are working their way through the voting process. What do you got to say here?
They should be live around noon EST today. So that's a whitelisted caller. So in Polkadot open governance land, that is a fast track. That is something that's approved by a council to make sure that it can get done expeditiously. So
Beautiful.
my understanding, just on the chatter that was happening in the hydration Discord this morning, it should go live. They said in about 6 hours, and that was at 6 a.m. So they'll put this about noon. And if you've seen Ben Law McShiz, they will all start at 69% or up to 69%. And so I'm already positioned, already have like my chunk of TBTC in there, just ready to earn incentives. Same thing for stables. So I moved some more stables into there because I just figured why not? Now this is for a 3-week sprint. So like they will renew these incentives. So that's going to be up to a vote. So like they're going to choose different assets based on these 3-week sprints. And this is going to go across 6 months. So it might not necessarily be the same pool every time.
Sure.
But right now, TBTC and stables, DOT, all these others, like the big ones that you would think for the first go are going to happen, and they should go live about noon today.
Perfect. Perfect context as usual, Phunky. Thanks so much for that additional context. Right, we're going to keep an eye on that for sure. That's a great opportunity. Got 2 more headlines to talk about today in 13 minutes. Ledger, I want to do the first one slightly more quickly because I want to dwell a little bit more on the perps conversation. First one is coin getting back to around 380. I think it pulled back just a touch, but S&P generally at all-time high here. What do we need to know? How do we need to think about the fact that S&P is in the position that it is?
Yeah, absolutely. You said it. Coinbase did hit an all-time high. It's currently trading, pulled back just a tiny bit, trading at 375, 374 in the pre-market. However, the general opening for stocks also looks very, very good because, as you said, the S&P was within inches of intraday all-time high, but S&P 500 futures are up 0.33%. So it really looks like we're going to actually hit all-time high for the S&P 500 today, intraday all-time high that is. And it's just a very, very strong dynamic seeing those things happening at the same time. That is S&P 500 all-time high and Coinbase all-time high. But the thing that might surprise you is that we've seen a bit of a reversal as well with Circle. Circle reported went under $200. It's back to 213, however, and up even more in the pre-market. So Circle's also back to 220. It seems like the buying frenzy is pretty strong around that. That might have to do for Coinbase specifically with the perp news, might also just have to do with the very bullish state of the S&P 500 in general, and the fact that I think Coinbase has been the best performing stock in the S&P 500 over the last couple of weeks.
Interesting. What are we making of this moving forward, Ledge? Like, we have noticed on the show, remember we say media is like a great indicator of how we read the market. You made the point, we've been making the point recently. The conversation is routinely shifting. If you just read the snapshot, there's a couple of things. When you should be reading my morning update, which I've been posting every single day for I don't know how long now. There's kind of 2 things you should be reading. One, like the actual news, and we talk through that. But then the second aspect of reading the news, and this is what we do on the show, we kind of dive into it a bit more, is like noticing trends and noticing how you can group together the different bits of information and put them together. And the thing that we've been saying recently is it seems to be the case that a lot of these items on the snapshot are moving in the direction of the stock market and treasury companies. It's like, okay, this company is buying Bitcoin. This company is raising to buy Bitcoin. This company is raising to buy Bitcoin. And this company wants to IPO and that company wants to IPO. And now we're in a stock all-time high. And now Coinbase is going to be at this price. And now Circle is at this price. So the crypto conversation has moved into these more traditional avenues in a way that it definitely was not positioned there 6 to 12 months ago, right? And so it's very important to note that and then start to warm up about thinking how you're going to participate in that. Arguably buying Coinbase. I know you bought Coinbase very recently, Ledge. I'm a Coinbase holder from a long time ago. I know Phunky is as well. Holding Coinbase from a while ago is obviously a great trade. Participating in Circle in any way, which I know you bought as soon as it came out the gate and held to around $200. That was a great trade. So thinking about that as much as anything else is probably a wise use of time here. But How are you thinking about the next set of moves? Let's like we go through all-time high and we keep going, or are you thinking anything else?
For today, at least, it looks like that. I mean, Nasdaq 0.1% from all-time high, S&P closed 0.05% away from all-time high, and pre-market looks pretty bullish. Looks like it's gonna go up more, which is a massive, massive reversal. If you think about the $10 trillion in value that got destroyed in the S&P 500 just a couple months ago, we had like we up 28% or so from earlier when the trade war started. So we definitely see volatility going both directions. For now, it looks like it continues to go up. I think the most important part still is that you have the flexibility when trading, because with Trump, that volatility is going to continue, looks like it. And there's going to be a lot of momentum to trade and to just not ignore the TradFi side of things. I mean, yes, with Coinbase, I was holding a significant Coinbase position on chain that I bought via BackedFi, which I had sold earlier this year. But it's typically the exception that you can buy stocks on chain right now. I know that's changing. I'm very excited for that. But having some money ready on your brokerage account, at least for some of the coming IPOs, whether it's Gemini or the others, and then evaluate if you want to participate. Right now, I do think I want to participate very, very strongly, but this might change on the day. We're just going to keep reporting on that as we get closer to those IPOs. But I think it's a fatal mistake to ignore TradFi this cycle.
Yes, I think so too. Do you know what I really want a slice of? Maybe just for fun. Depending on the valuation, I really want a slice of Tron. How are you not going to buy Justin Sun's IPO? You know what I mean?
Yeah.
I think it's just going to be, I don't know. But yeah, look, I agree with all of that. I don't know if we like rocket through immediately necessarily, but I know based on the trends that we're seeing that there's actually a secondary part of this, which I don't want to dwell on because I want to get into the next conversation, but the it's not secondary. The ancillary part of this is, okay, we're noticing a lot of stuff going here. When was the last time you opened a Sol wallet, Ledge? When was the last time you bought a meme coin because you thought it was going to 2x or 3x or 4x? And don't say yesterday. It wasn't yesterday, was it?
No, meme coin. What was the last meme coin I bought? No idea.
Honestly, I just think we're so on chain now and we're so like active, and we have been for years now. That's why we do what we do. We can predict this stuff just based on when we open particular wallets.
Yeah.
Like
but
how often are you
yesterday? Because I'm still Sol wallet I opened yesterday. I'm still going through all my Solana wallets because of that new online casino that has a bit of a sketchy reputation, but also has a bonus for wallet activity. So I'm just still going through that and claiming my bonuses on eligible wallets and withdrawing them back. I think it's like,
is it actually meaningful, by the way? Because I guess I should check that as well.
A couple hundreds to 1,000 if you have a bit more active wallets. So yeah.
Oh, okay. Well, that's pretty good news. If you've been active on Sol, at least go and check if you can. So it works. You can go in and claim and take it out.
Yeah. It worked. Even gambled on some of them and was able to withdraw. So again, not gonna name the casino because I don't really like it and I don't want to like encourage gambling. But for the airdrop part, it worked. I think Moritz had also reported on that it worked to just go claim and withdraw. And if you have a ton of wallets, that is adding up quite nicely.
Okay, so that's helpful. We'll probably go and often check that. Right, final headline, Ledge. This is the one I want to hear a variety of views, and we've got a variety of views to give people because I think it's important to hear them and come to a conclusion. We've got 5 minutes. Coinbase are going to launch perps in trading in the July. What is the news? What do we need to know? What are the takes out there?
Yeah, going to be really quick with the actual news because I want to get into the discussion. As you said, July 21st, US perpetual style futures will be launched by Coinbase. No quarterly expiration dates, spot price tracking, embedded leverage, and all on a CFTC regulated US exchange. And that got the timeline discussing. And I feel like one of the main discussion points was, well, there was 2 discussion points. A, will people use that? And there's like various takes as to why people will or won't use that. And B, what does it mean for Hyperliquid? Is this bullish for Hyperliquid? Is it over for Hyperliquid? Or does it even matter? That's basically the discussion that sparked. Maybe starting with the first part, will people use it? There's been a couple pro takes. The one I got on screen by Steven is saying trading Coinbase perps has a huge tax advantage over other crypto perps and spot platforms. That is from a US perspective. I don't know why all US crypto traders wouldn't switch to this the minute it goes live. It has to do with the 60-40 tax rule, which we just don't have the time to get into that. But that's one of the pro arguments. It might constitute a tax advantage. Also going back once again to Mr. Todd, whom we quoted earlier on the show, not a fan of that, saying it's a front-end rig on the CME, far better product. CB is Coinbase's low value provider. There's zero consumer rewards. It's not even close as a product. Maybe one day. This is not it. That's it from the user's perspective. Real quick, B, do you want to add anything to that, or shall we go on to like the Hyperliquid lens?
Just I want to hear these variety of views, because there were a few interesting views expressed.
Then moving on to the Hyperliquid side, Ericonomics said the Hyperliquid FUD due to Coinbase listing perps on the US will last until they effectively launch it and get less than 1% of the volume and open interest than Hyperliquid. This kind of reminded me of Coinbase launching the NFT marketplace, which is when we all back in the time hope this is going to constitute our exit liquidity. Monk is saying that Coinbase perps is net bullish for Hyperliquid. Power users will eventually want composability, low fees, non-KYC. Eventually, they funnel into Hyperliquid. On the other end, I don't think we see leakage within Hyperliquid's core users towards a more centralized venue. That's also a good way to look at it, to think like if people from Hyperliquid will leave for Coinbase. Another take for the past 2 years, anytime anybody has ever posted about using Coinbase, that's been the most negative soul-wrenching experience possible. I'm sure the perps offering will be best in class and blow away the competition, a bit more sarcastic in nature. Then the other side of that, Coinbase being net bearish for Hyperliquid. New competitive Hyperliquid is fully US compliant, has a large user base, and has bought a large derivatives exchange that is Deribit. Robinhood will launch a perps product to compete with Coinbase, adding another fully US compliant exchange with a large user base. Robinhood users do like to gamble, they do like leverage, and Robinhood's product team moves fast. We've seen the Hood stock, by the way, also doing pretty well. So Robinhood's product team moves fast, e.g. prediction market integration. My intuition tells me that people use Hyperliquid because there's no KYC, there's no similar leverage product offering on US exchanges or exchanges that service US users. It's the best perp, quote unquote, DEX product. And it's well done in terms of customer acquisition and retention via airdrop and tokenomics. A couple more takes. I'm going to pause there for a second.
Yeah, I think I thought it was helpful to hear all the variety of takes, because I actually think they're all pretty good takes. Like, I think they're all, when I was going through them, I thought they were all had reasonable points, and I didn't like strongly disagree with any, in the sense that like I can definitely see why some of the Coinbase argument was strong. I could also see very clearly why the Hyperliquid argument was strong. My intuition here, I don't actually know, so I'm curious to hear your thoughts. But as I was hearing those out, and Phunky, I'm going to come to you in a second as well. We'll go Phunky, then back to Ledge to close the show. I agree with that final take, which is people use Hyperliquid because there's no KYC, there's no similar product on the US at the moment. And I also agree that with the take, the kind of jokey take, which is, I don't know how well loved Coinbase is a product at the moment. I think, at least from what I've observed online, there's been a lot of people saying like, look, my money's stuck, I can't get it out, blah, blah, blah. Like, people are pulling their hair out trying to use Coinbase. You obviously don't have that in a, quote unquote, decentralized perps exchange. One final point, which I'm thinking out loud here, is I think you can have as many users as you want in one aspect of crypto. Like, Coinbase can have as many users as they want. And I know they've bought Deribit, which I think is relevant. But Robinhood, for example, do not have perps at the moment, but they do like to gamble. It's not straightforward to just become to turn all your users into perps traders. Like I am been in this space for 4 years, and clearly I'm not averse to risk. I have not put on one leverage trade on Hyperliquid yet. Like I've used Hyperliquid a lot, and I'm super exposed to the ecosystem, and I'm off in the EVM, and I'm doing all kinds of things. But like it's not necessarily straightforward to convert even a high risk individual or someone who has a high risk tolerance into a perps trader like automatically. I don't think so. That's one thing I'd say. Like Hyperliquid has all the people already doing the things that they're doing. These people have a bunch of users who they're hoping will use the perps products, I think. And maybe I'm kind of lean, you know, obviously we're maybe biased. We have significant hype holdings. I'm kind of leaning towards Hyperliquid or Hood, frankly. And maybe that's a little bit of bias because we have the memory of them allegedly going to take over the whole NFT market. And if you were here in 2021, people were literally, including myself, this is a funny thing, I bought NFTs because I thought that Coinbase were going to onboard the world to NFTs and I'd be able to sell them to people who got involved. Like I literally did that. That is a literal thing that I did. But sometimes you can't execute in this new vertical that you're kind of going into. That's just the reality of business. It doesn't matter how significant you are in one vertical. So Phunky, want to come to you first. Oxy's got his hand raised. Then we'll come to you to close the show, Ledge. Just a few more minutes as we're running over here. Phunky? Okay, maybe Phunky is not with us now. Maybe he's kind of running over time. Oxy, do you want to come in here instead?
Yeah, super quick. I think so. I was just a quick and dirty research looking at Robinhood's Q1 2025 review. It looks like I think the people that you're going to be capturing here are options traders on Robinhood if they were to adopt perps, and I think that's who are the like easy to transfer. I think we talked about this on the show previously with Brad, but 41% of Robinhood's volume for Q1 2025 was through option contracts. And I think that's super reflective of who's the user is going to be for perps, because it's a leverage trade, right? So I'd be really interested to see if Robinhood does adopt this. Do they capture a huge portion of that? Because it's easy to, I think they're much easier. Perps are much easier to comprehend than options are. So I just thought that was interesting.
That's really helpful numbers there, Oxy. Appreciate that additional point. Ledge, we're running over here, but went through a variety of takes there. Where are you coming down here if you have to?
I think both things can do well and are doing well. I mean, Robinhood is up 34% over the last month as a stock. Hyperliquid is obviously doing extremely well as an ecosystem. I do think that both speak to a different kind of user groups. Just thinking about this post that I saw today by Pix, who had a couple of airdrop guides and farming guides for Hyperliquid. He said, just saw someone use my strategy and casually bridge mid-7 figures to Hyper EVM. That's what I call onboarding Hyperliquid. And that's a different user group to people trading options on Robinhood and now looking to get into perps. So I think there's enough money to go around for both things being able to do well. And I don't think that Coinbase perps is going to be, even if it's going to launch and be like super successful from the get-go, going to be successful, and Robinhood is going to build something to compete with Coinbase, then I don't think that this is the end of Hyperliquid. And neither do I think that Hyperliquid is the end of TradFi perps products.
Okay. Maybe a responsible take there as we draw towards the end of the show for the day and for the week. Thanks so much for joining us. As always, thanks, Ledge, for co-hosting with me. Thank you to Phunky and Oxy for their contributions today. We do this every single day, Monday to Friday, 7 a.m. Eastern time for 1 hour live on X and X video and YouTube. And you can catch us on Apple and Spotify podcasts if you want to catch up with us on those platforms. We hope you have a wonderful day. Hope you have a great weekend, and we will be back same time, same place on Monday. Have a good one. Take care. We'll see you then. Bye-bye.